So this fun little chart I drew up for you here will make, it looks a little daunting right now, but we're going to make this make as much sense as possible. When we're picking those three insurance plans, again, we're talking the A1 Premier Gold Platinum plan, whatever they call it, 2 that middle of the road plan, and 3 that lesser plan. There are 3 big terms we need to understand that's going to make all this stuff make a little more sense, and why one plan might be a little rated higher versus middle of the road to a little rated lower than the others. So the 3 big terms you need to understand are premiums, deductibles, and out-of-pocket max. So let's start with premium. What is a premium? A premium is what it costs you, the consumer, to have this plan. With that, that's what you take out each paycheck, or if you're going through the government, what it may cost you each month to have that plan. That's what you are paying for that health plan. So even though under most professions your insurer is providing it, there still is a cost to you that's coming out per paycheck. Word number 2 is deductibles. Deductibles is where it gets a little tricky, but if you've gone through some insurance stuff in the past, you've probably heard that word. Deductibles is what it's costing you out of pocket per issue that you're having, or per case, per incident that you're having with regards to your health care. So if you're getting a surgery, going through physical therapy, going to the doctor's office, there is an amount of out-of-pocket expense you have to pay on a deductible plan, where before your insurance or the healthcare provider or the insurance company kicks in anything, there is a deductible, a set amount of money that you have to meet. Third is out-of-pocket max. Out-of-pocket max is a little bit different from a deductible because you're still paying toward an out-of-pocket max after you've hit a deductible. Confusing, I know, but again, we're going to make this make sense in just a second. So again, just getting through those big 3 terms. Premiums, what it costs you per paycheck just to have health insurance. Deductibles, a yearly set amount of money that you have to pay out of pocket before insurance starts to pay anything. And out of pocket max is the total amount of money that you have to pay before everything is 100% covered. So once your deductible is met, there generally speaking is a small co-insurance. And again, another scary term, we'll get into that in a second. Versus out of pocket max is your healthcare expenses that you've paid for out of pocket. There's a finite amount. Once you've hit that, everything is covered at 100%. So now that we have an understanding of those big 3 terms, premiums, deductibles, and out-of-pocket max, let's talk about how this typically applies to choices that you have in your healthcare plan. So again, looking at plan 1, 2, and 3, where plan 1 is that top-notch premium plan, plan 2 is that middle-of-the-road plan, and plan 3 is that least expensive plan. How do these 3 terms and these 3 things kind of shift, and how does that affect you as a consumer? Let's start with the Mac Daddy, the big, expensive, premium, platinum, whatever they might call it at your work plan. That plan has increased premiums compared to the other 2, meaning that it costs you more per paycheck to have this plan. So, for example, if your healthcare premium is, say, $200 on the Mac Daddy plan, it's going to be the most expensive, and that's per paycheck that it takes out of your paycheck to have this plan. The reason being is that because your deductible is the cheapest. So you're paying more just to have insurance, so that when you use the insurance, it costs you less money before your healthcare plan kicks in and starts paying. And then in fact with that, you have a smaller out-of-pocket maximum. So your initial costs are cheaper for an incident, and it costs you less money when you have trouble before insurance starts covering it 100%, but the caveat being that you're paying more in a premium. Conversely, with the second plan, that kind of middle-of-the-road plan, your premiums are in the middle between the 2, but also your deductibles and your out-of-pocket maximums are going to be a little higher than the premium plan, but a little cheaper than the bronze or the third tier plan. And then obviously with the third tier plan, it's costing you less money every single paycheck to have that health insurance. But it's costing you much more in a deductible and more in an out-of-pocket max. So again, just to review, on the premium Mac Daddy Premier plan, you are paying the most money just to have health insurance, but for when you go to use health insurance, it's costing you less. Plan 2, you're paying middle of the road to get middle of the road coverage, basically. Plan 3, it's costing you a lot less money out of pocket, but when you go to use your health insurance, it's going to be much more expensive. The good thing is that your provider or your HR department, whoever at work, can tell you exactly what these numbers are. And you can really just crunch the numbers to see, does it make sense for me to have that plan? For example, if you know that you have something big coming up, a surgery, you're having a baby, you know you're going to be pushing the limits, definitely hitting your deductible, maybe your out-of-pocket max. You can crunch the numbers and say, is it worth me to pay more per paycheck to have that more expensive plan, knowing that I'm going to hit these numbers, and in the long run, will I save some money? Or does it not make a difference and you're going to pay the least amount of money, but knowing that you'd rather pay the out-of-pocket expenses for healthcare when they come up? Those are things, again, you can really look at the number and you can do the math to see, does that make sense in terms of kind of what kind of coverage you need. Another thing is too, if you're young, if you're healthy, you might think, well, I don't need that insanely good coverage. So why would I pay more money for each paycheck if I'm not going to use the health insurance? That's where you can get in a little bit of trouble, because if something major happens, these end up out-of-pocket expenses to use that health insurance go way, way up. So all things to think about. And then we're going to break these down a little bit further into some more different terminology, but just kind of big picture takeaways. If you want the Mac Daddy coverage, you're going to pay for more each paycheck. If you don't want to pay a lot each paycheck, you're going to pay if and when you use your health care. They're getting their money somehow, whether it's first up front or later. And again, when you get those numbers, you can crunch the numbers and see what math makes the most sense for you.